Good morning. This is Horizon's Middle East and Africa. Our top stories this morning. President Trump says new talks are Iran's last chance. Tehran denies direct talks, but says discussions with Oman on Hormuz are making progress. Backing the yen, U.S. Treasury Secretary Scott Bessent urges the Fed to expand support for Japan's currency, putting a rare Treasury-Fed link in focus. And Asian stocks fail to follow Wall Street's tech-led rally as persistent volatility in South Korea's Kospi underscores lingering concerns over the AI trade. It has just gone 8 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Top of the show, before we start with our markets check, earnings this morning breaking just now across the Bloomberg terminal. That is HSBC's second quarter earnings. Its pre-tax profit is at $10.1 billion. The estimate was $9.51 billion, so a beat there. We're also taking a look at its $1 billion share buyback, another beat for another financial institution. Now, this was widely expected. I was taking a look at a story earlier that we had, a preview about HSBC. Its stock was climbing to an all-time high on Friday, the end of last week. That was helped by a broad recent sector rotation into Hong Kong, listed financial stocks from high-flying technology sector. So we're taking a look at HSBC's earnings just out now. They say they remain confident in achieving the target set out in February, the $1 billion buyback, and the pre-tax profit for the first half of the year is at around $19.5 billion. And the revenue, 37.7, around $38 billion for the first half of the year. So those were the earnings. Yet again, another beat. We saw Standard Chartered, we saw UBS, all of those European banks posting those beats for the second quarter of the year. Now, moving on to our broader markets check, we're taking a look at the usual this morning. U.S. futures are tilting a little bit higher this morning, 0.2%. The S&P did close in the positive yesterday, 1.5% higher. We're also taking a look at the tech-heavy NASDAQ 100 that closed about 2% higher yesterday. Both of these major gauges, 3 sessions in the green, straight sessions in the green. We're also taking a look at individual names. Palantir is one of them. It was gaining massively in after trading yesterday after boosting some of its numbers. We're also taking a look at SpaceX, its inaugural report, its first report as a listed company is due later today. So we're keeping an eye out on what that tells us about the company, its profitability, and what it means for Elon Musk's conglomerates. We're also taking a look at Asian equities, not really taking their cues from Wall Street. 0.7% lower for the MSCI Asia Pacific. Kospi weighing down yet again on the wider gauge. We're also taking a look at the yen. Another intervention there, a sharp advance that we saw on Monday that fueled speculation that authorities may have intervened to support the currency again. We'll talk more on the show about that. And then the story for us, again, in this region, Brent crude prices tilting higher, 1.4% higher, about $85 on the barrel. Conflicting statements between President Trump and Iran. Are those talks happening? Are they not? We'll discuss that momentarily. And then the yield on the 10-year notes is about 1 basis point higher this morning, keeping its gains from the past session. We saw big movements at the end of last week. We're also waiting for that JOLTS report coming out later in U.S. hours. But just moving on to the regional story, continuing with the geopolitics, President Donald Trump says his latest offer of talks is a, quote, last chance for Iran. Tehran denied negotiations with Washington, but says talks with Oman to get more ships moving through the Strait of Hormuz are making progress.
Well, you don't know. I don't know. I think we're going to maybe get something, but I want to give them every last chance before decapitation. It's very tough to do what we have planned, still planned. We'll see what happens. But it's a very, very tough thing to do. I think I'm very proud of the fact that I'll give people a chance. This is a big move. To do an attack that big on a country, I'd rather not do it.
For more on this story, we're bringing in Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Stuart, here we go again. I feel like we've been starting our segments with that line every single day for the past few weeks. Are those talks actually happening like President Trump has said they were?
There's very little evidence that they are. Or at least let's conflate two different negotiations. So you have the ones going on between Oman and Iran. That is a real thing. That seems to be making progress, and you've had that sort of rhetoric coming out of both sides. Basically to find this new path through Hormuz, quite how it's governed and fees and so on remains to be seen. However, the optimism you should derive from that is if you can fix that problem, you get Hormuz reopened, which admittedly is a ways off, but let's assume we get there. That actually takes the pressure off enormously in terms of the global economy and in terms of Trump's I think, determination to act. In other words, that will give everyone a bit of breathing space. This other line of talks that may or may not be taking place depends who you believe. Do you believe the US president, or do you believe the Iranians, or do you believe the mediators? So I think probably what's going on is that the people in the middle, that is the sort of the Saudi, the Qatar, the Pakistan, Turkey, etc., probably are doing outreach on behalf of both sides. Quite what that looks like, we don't know.
So the Strait of Hormuz, Stuart, we are seeing Brent crude prices and other energy products as well rising this morning. They're really still moving in tandem with the geopolitical headlines. That talk, or those talks that are happening between Oman and Iran, first of all, we understand that they're going to have a temporary effect on the Strait of Hormuz, so opening a middle passageway. What else do we know about what exactly Iran is trying to do there?
I mean, ultimately, I think Iran would like to maintain control, total control over Hormuz. That is clearly what it would like. What it may settle for, perhaps, is some sort of joint custody with Oman. So in other words, the two littoral states have some sort of joint authority. Quite, again, what that looks like, we don't know. But the contrast to draw here is between, as you say, the energy markets that are up and down like a yo-yo, and weirdly enough, look at the prediction markets that are flat as a pancake. They've moved up like 1 or 2 percentage points. So that we are in a strange situation where the prediction markets are calmer than the energy markets, which is unusual.
That is fascinating. It feels like they've moved on. We're just waiting for energy markets to kind of start looking beyond those headlines every single day. Stuart, thank you, as always, for your time. Stuart Livingstone-Wallace, Bloomberg's executive editor for the Middle East, North Africa, and Russia. Now, to continue this conversation, joining us now to discuss this is William Roebuck, Executive Vice President of the Arab Gulf States Institute and former U.S. Ambassador to Bahrain. Ambassador, good to have you with us this morning. I'll start with a pretty simple question. How many more times do you think we're going to see this rhetoric from President Trump, threatening to escalate and then pulling back?
Well, if the past is prologue to the future, we're going to see it a lot and hear it a lot. It's almost, I can't count the number of times that we've had it in the past. It seems right now, although it's very difficult to know exactly what the dynamics are, but it seems that the United States is more interested in reaching an agreement of some kind and getting the strait reopened than the Iranians. I think the Iranians are intent on trying to retain control of the strait into the future. They see that as leverage for greater influence in the region, in the Gulf, and in the broader Middle East in the future. They see it as leverage for their broader negotiations with the United States as well.
And so, Ambassador, I want to get back to the Strait of Hormuz because it seems that it is the priority for both sides at the table right now. But why do you think President Trump does this or has been doing this for so long? At this point, do you think that it's the midterm elections looming? Do you think it's low ammunition, like what was widely reported? Or do you think it's Gulf states that have been pleading with the United States or President Trump to halt those attacks and return to diplomacy?
I think these are all constraints on his action. I think the most immediate one, and the one that was probably the most persuasive in this instance, was interventions from Gulf leaders. It seems that the Saudi Crown Prince in particular, but also I understand from media reports, The Emirati leadership, the Qatari leadership also weighed in. They're very worried about their infrastructure being targeted again. The Iranians made clear in public statements that they would precision target the type of infrastructure that whatever the United States targeted in Iran, they would match that, and they've shown that they could do that. So the Gulf leaders were quite worried about it.
So 6 months into the war, almost 6 months into the war, who has the upper hand right now? Is it Iran? Is it the United States?
Well, as a former American diplomat, I'd like to say that it's the United States. But looking at things honestly, in terms of what's going on, I think that control of the strait that Iran has managed to exercise is a very decisive piece of leverage. And they've shown the ability to retain it despite powerful military coerciveness from the United States. So I think that puts them in a powerful position to sort of counter the military pressure and seek a better set of parameters in negotiations. Although I think they would be happy to go back to the MOU.
Okay, so given the kind of dominance they've asserted over the Strait of Hormuz, do you think that going forward the United States is going to have to, for the lack of better words, succumb to this pressure from Iran and realize that this might be the new reality of how things are controlled in the region, that leverage over the waterway?
The president has got himself in a strategic dilemma. Obviously, the United States has military dominance. It's a superpower. Iran is a 7th, 8th rate military power at best and has been severely weakened. But the United States, because of these constraints we talked about, the United States is not really in a position to fully exercise that military power over Iran. I hear President Trump when he says that that attack is going to come. We'll see. It would cause a lot of damage in the Gulf as well, massive damage, I think, if that would match the damage that was done in Iran. So it's going to have to be negotiated. And the Iranians have a lot of leverage with their control of the strait and with the ability they've demonstrated to attack Gulf neighbors and drag them into this conflict and asymmetric warfare.
All right, Ambassador, a lot of unknowns, but we're going to have to leave it there today. William Roebuck, Executive Vice President of Arab Gulf States Institute and former U.S. Ambassador to Bahrain. Now, still ahead, we will get the market outlook from the Commercial Bank of Dubai as traders grapple with major shifts in the AI trade and a new era for the Fed under Kevin Warsh. This is Bloomberg. Asian stocks are failing to follow Wall Street's tech-led rally as persistent volatility in South Korea's Kospi index underscores lingering concerns about the AI trade. The yen is also slipping after its intervention-led gains. So joining us now to unpack all of this is Deepak Mehra, Chief Economist at Commercial Bank of Dubai. Deepak, good to have you on, as always. We alluded to the Kospi in the intro, so it feels just about right to start with it. And to start with just the wider picture of what's been happening there, what's been happening in South Korea, what's been happening in Taiwan as well. We were just talking about the fact that those two countries or those two gauges contribute to about 45% of the MSCI Asia EM index. And they've been really weighing down on the overall index. So what is the risk there of those technology stocks and the volatility we've been seeing there on wider sentiment?
Oh, yes, Abir, it's so much happening in the AI trade right now. We've been through so many other episodes before this. But the latest is that these were hyper-leveraged positions that had been built on just two stocks in South Korea, which eventually led to massive wealth destruction for individuals and investors in Korea. Well, it was not limited to that because it spilled over very quickly to the rest of the space and more specifically to the US tech. So this is a disruptive phase of AI value discovery that we've entered. And a lot is happening. I mean, last week we had a Chinese firm challenging ASML's monopoly in the lithography chip-making machines. Then you had Alibaba coming up with Qwen 3.8 Max, and you had Kimi K3 already there. So now you're talking about even Anthropic and OpenAI valuations getting questioned because these tokens are available at a fraction of a price. So a lot of value discovery needs to happen. Where would this AI trade lead to? At the same time, you see the results from Microsoft and Amazon. They tell you that AI investments are paying off. So are we heading into the same sort of parallels which we saw during the internet build-up, where maximum value was achieved by the end users, applications, and customer-facing?
And that's a good question to get to, and I want to get about that competition with China. But right now, there's still some gains to be seen in the wider AI game. How do you get exposure to that? How does an investor get exposure to the AI-led gains?
Yes, yeah. So I think if you are an institutional investor, you've seen how badly these hedge funds have done. Situational awareness, and this morning you've reported Mathieu as well. So it doesn't work out very easily when you are in this disruptive stage where we need to figure out which layer will eventually get the value. But if you're a non-professional, non-institutional investor, life is much easier. You don't need to get into leveraged ETFs.
Okay.
You have a beautiful technology ETF which you can stay in invested. Triple Q, it's going to get... It's going to capture all the value somewhere.
So still triple Q, this is where retail investors or the everyday investor should go.
Absolutely.
Okay, I want to talk about macro a little bit more. With the Fed, there's some changes coming up under Kevin Warsh, fewer meetings, different policy settings perhaps. What are the wider implications of this different approach at the Federal Reserve at a time like this?
Yeah, I mean, it's adding to more uncertainty. Less information coming from the Fed means more noise and the risk of more mispricing by the markets. Exactly what Kevin Warsh is telling us, saying let the markets decide where the data is and we will take cues from the market. Doesn't work like that. The markets could misprice and could lead to more volatility. He's talking about fewer meetings, lack of forward guidance. I don't think this is what we need at this point in time when there is so much of uncertainty in any case.
Okay, so moving on just from the Fed to the yen, very timely. Do you think these interventions are going to still continue to be Band-Aid solutions and we're going to need to see more meaningful policy responses going forward?
Yes, I think this is mission critical for the U.S. as much as it is for Japan, probably more for the U.S. Because what's happening is that Japan is the largest holders of U.S. Treasuries. And what we saw last week when we saw 30-year yields rising by 14 basis points, it could very well have been because Japanese were selling U.S. Treasuries to protect the yen. It happened at the same time. And no wonder Scott Bessent has asked the Federal Reserve to increase the repo lines so that Japan uses them rather than selling U.S. Treasuries. But the pressure on yen is likely to sustain because of fiscal spending and reluctance of Bank of Japan to increase interest rates and so on.
All right, there you go. The yen pressure set to continue. Quoted to you, Deepak. Thank you, as always, for your time. Deepak Mehra, Chief Economist at the Commercial Bank of Dubai. Now, coming up, President Trump's peace plan is under pressure as Israel steps up strikes in Gaza. More details on that story next. This is Bloomberg. Israel has stepped up strikes on Gaza with at least 19 fatalities reported over the weekend. The escalation comes after Hamas conditionally agreed to disarm late last week. Israel has yet to accept the fresh agreement with Hamas, accusing the militant group of trying to buy time to recover and plan new attacks. To get more on the story, we're now joined by Bloomberg's Dan Williams in Jerusalem. Dan, the deadliest weekend in Gaza since that truce was reached in last October. Have the strikes ended President Trump's latest peace plan efforts?
They haven't. They have put strains on it, though, and we know that because the top envoy of the Board of Peace, that's that US-led consortium that's meant to see the implementation of the Trump plan for Gaza, the head of that consortium was actually in Israel yesterday for what appear to be emergency talks with the Israeli prime minister, or at least a closing of ranks over what Israel and the Board of Peace and Hamas should expect from this latest development. As you noted, it's been 10 months since a ceasefire was achieved in Gaza. That was the first stage of this Trump plan. And those months have been spent with mediators trying very hard with great difficulty to find a bridging formula that would allow Hamas to get to the next stage, which would entail decommissioning weapons and laying the path for peace and reconstruction in the Gaza Strip. Hamas appears to have accepted that. However, the conditions it set worried Israel that Hamas was effectively looking to keep its rifles, its small arms, tens of thousands of assault rifles, something Israel says is absolutely out of bounds. And now it appears there has been some agreement about the full decommissioning of weapons.
So, Dan, you spoke a little bit about what this entails for Israel and Hamas, but can we talk a little bit more in details about what exactly will be required out of the two parties here? Is it a situation of who blinks first, who disarms, who pulls out?
I think it's a very good question. You've noted the essence, the question of sequencing here. Hamas essentially wants to see an Israeli withdrawal and Israeli steps towards Palestinian statehood, it says, before it fully decommissions weapons. Israel says no, there'll be no movement on those fronts before Hamas is fully disarmed. By fully disarmed, and this is stipulated in the Trump plan, that would also mean a destruction of Hamas tunnels, underground bunkers, which really are a warren underneath the Gaza Strip. Keep in mind that Hamas still controls some 35% of the Gaza Strip. The Israelis have been advancing in the absence of a breakthrough. The Israelis say without a destruction of those tunnels, a process that would take months, there's nothing to discuss about moving to the next stages.
All right, Dan, following that story for us, Bloomberg's Dan Williams in Jerusalem. Now, coming up, Aramco faces second quarter earnings under strain by war in the Middle East. Yet, it may find some reprieve due to higher oil prices. More details on that story ahead. This is Bloomberg. Good morning. This is Horizon's Middle East and Africa, our top stories this morning. U.S. President Donald Trump says new talks are Iran's last chance. Tehran denies direct talks but says discussions with Oman on Hormuz are making progress. Backing the yen, U.S. Treasury Secretary Scott Bessent urges the Fed to expand support for Japan's currency, putting a rare Treasury Fed link in focus. And HSBC's beat and buyback. The bank delivers strong second quarter earnings results and announces a fresh $1 billion buyback. It has just gone 8:30 a.m. across the Emirates. I'm Abir Abu Omar in Dubai. Before we head into the second half of our show, let's take a quick look at where markets are sitting this morning. U.S. futures still in the green, 0.2 higher. We're taking a look at individual names there. Palantir, for example, that was gaining about 14% in extended tradings after results or after announcing a boost to some of their numbers. Amazon, on the other hand, was dropping slightly, and this is after Chairman Jeff Bezos announced that he would be selling some of his shares, or filed to sell some of his shares. Now, the S&P 500 did gain yesterday, 1.5% higher, taking it into 3 sessions in the green. NASDAQ 100, the tech-heavy NASDAQ 100, had also gained about 2% yesterday. So we're seeing a return to the AI story. We're seeing a little bit more optimism in technology overall. But that is not felt in Asian stocks this morning. MSCI Asia Pacific, 0.6 lower this morning, way down No surprise there. The Kospi in South Korea is dropping. Its two biggest constituents were dropping earlier as well. So we're taking a look at some of the weaknesses there. Currencies in focus. The yen, another round of intervention possibly there. So we're taking a look at where the levels of the yen are against the dollar. It's about 157 for the time being. That is a threshold that we'll be monitoring for the next few days. And then Brent crude prices 1.3% higher. We'll talk a little bit more about Aramco earnings expected a little bit later on. But then the big story, of course, is the geopolitics in the region. Those contradicting statements between President Trump and Iran. Are those talks actually taking place? Where are they taking place, and who exactly is having them? And then the yield on the 10-year Treasury notes, about 4.69%, a 1 basis point gain this morning. They're holding up gains from the previous session, a little higher on the yield today, but we're also keeping an eye on gold and the U.S. dollar. Gold is a little bit higher this morning, and then the U.S. dollar has been moving in tandem with those geopolitical tensions stemming out of the Middle East. On key economic data coming out of the United States, we're keeping an eye on JOLTS expected later today. But for a deeper dive in on what is happening in Asian equities this morning, we've got Winnie Su in Hong Kong for us. Winnie, what do you have?
Yeah, good morning, Abir. Well, we are seeing Asian stocks extending declines for a second day. But just to put things into perspective, the gauge, in fact, saw a 5% jump on Friday. So we're still seeing those moves being digested right now. Well, we did see South Korea's Kospi index fluctuated throughout the day, but right now more leaning towards the downside, with chip makers continuing to get sold off. But it is also a rotation story, as you can see that it's rotating into the small cap gauge Kosdaq index here, up 5%, and that is rising for a third day as well. Korean won was leading declines among Asian peers earlier today as the local firms continue to sell U.S. dollar. Now, flip the board, we take a closer look at Japanese assets, because Japanese stocks, in fact, also seeing a bit further downside. It is a very big week for earnings in Japanese companies, and today we did have Mitsubishi UFJ, the financial name in Japan, leading losses in Japan after those earnings, unable to impress investors. But just as you mentioned, front and center, we have Japanese yen, in fact, losing some of those steam after the big gains following that joint intervention between the U.S. and Japan. Investors are still quite skeptical given that rate differential, and they want to see more from the Bank of Japan to turn more hawkish and potentially an earlier rate hike. And that expectation is also showing up in the bond space, as we just had the 10-year bond auction seeing its weakest demand since last year in May. And that goes to show how investors still are expecting the Bank of Japan to move faster. Back to you, Abir.
All right, Winnie Su in Hong Kong with those market details. Now we have to go back to the oil story. The world's largest oil exporter, Saudi Aramco, is set to report its second quarter earnings later today as the company faces disruption from conflict in the Middle East. Aramco's lower upstream production and sales volume is expected to weigh on revenue, but elevated oil prices may cushion the impact. We're now going to get more from Bloomberg's Middle East energy markets reporter Anthony DePaula on these pending Aramco earnings. Anthony, we'll talk about Hormuz a little bit and the impact that possibly could have on the earnings set out for later today. What could we see there?
Good morning, Abir. Yeah, Hormuz is definitely having an impact on the industry writ large, as well as specifically on Aramco. And it's having a bit of a push and a pull effect in the sense that Aramco is really dependent, just like the rest of the Gulf producers, on exports through the Strait of Hormuz. Its main export hub, Ras Tanura, is inside the Gulf. It relies on Hormuz to get those barrels out. So they have had impact on their ability to export. What is tempering that a little bit is the fact that they've got the Red Sea exit as well. They've got that pipeline running across the country. They've been able to maintain exports, not at the full normal level, but roughly around 70% if they pump and export the maximum capacity through that pipeline. And then they've got the oil price that's helping them as well. So we have seen in the second quarter actually a higher average oil price than we did at the first. Maybe we didn't have those high peaks that we had in the first quarter when the war first started. But we had 3 months of volatility there, which really did raise that average oil price. So that's going to feed into the Aramco earnings. So we are expecting an increase in the adjusted net income year on year from the company.
Okay, and then for the Red Sea, I would assume that the risk that is happening there from the Houthis in Yemen would translate into different quarters. But then generally, Anthony, when it comes to the earnings that we're expecting later today, a pivotal time for oil companies, Aramco, the biggest one, what else will you be looking at in terms of the intricates?
Yeah, so we're looking mainly at the production and the exports that they're able to do on crude oil, but also on refined products, because we have seen huge price increases for refined products like diesel, like jet fuel. Aramco's got a number of refineries on that Red Sea coast, and those have been pumping out products quickly. So we're going to see how that potentially benefits the bottom line in this quarter. And of course, looking forward, we are going to be looking at that export picture. What is happening with the Red Sea? You mentioned the Houthis threatening the Bab el-Mandeb Strait to the south of the Red Sea. Is Aramco going to be pushing more through the Suez Canal into the Mediterranean and into global markets? So we're really going to be looking at the future there as to what are their plans for those continued exports, and potentially even what the company might be developing further on down the road in terms of longer-term strategies to maintain exports and production.
All right, Anthony, thank you for that update and what you will be looking at in a couple of hours at this point. Bloomberg's Anthony DePaola with the latest on Aramco. Now, sticking with oil, President Trump has scolded ExxonMobil and Chevron for their soaring profits after oil prices surged amid the war in Iran that he launched in February alongside Israel. Both companies made $29 billion combined in the second quarter, or about $318 million a day.
They're making too much money, okay? Based on a shortage, they're making too much money. I don't like it. And I should be the last one to say, because I'm a big free enterprise guy. Chevron, too much money. ExxonMobil, too much money. When you look at one company where they made 12 times what they made the year before, they're going to give some of that back to the public, and they better cut the retail price, the consumer price.
Now, moving on to currencies, the yen held steady through the New York trading session Monday after a sharp advance earlier in the day sparked speculation that authorities may have intervened to support the currency again. The joint U.S.-Japanese intervention has now shifted market focus to whether the yen can strengthen beyond 155 per dollar. That is a threshold seen as a key test for the rally's staying power. Joining me now to discuss this and more is Mathieu Savary, Chief Strategist and Head of FICC at BCA Research. Mathieu, good to have you with us this morning. Starting with the yen, as I have alluded to in the intro right there, the levels that it is at now, we've reported multiple interventions. What really is the line in the sand for more of these interventions to happen? This is not the first time we've seen something like this happen when the yen crossed over, for example, the 150 mark against the dollar.
Yeah, well, thank you for having me. When it comes to the level of the yen that prompts intervention, it's not really a level. It's more unilateral moves that will cause those interventions. The authorities want to limit the carry trades, and carry trades are very much a function of volatility. Low vol equals more carry trade. So those interventions, you can see them as a way to inject volatility and deter carry trade. And that's all what they can really do in the short term.
And so, Mathieu, I was also taking a look at some of your wider research, and you point out that the cushion supporting risk assets generally is still in place for the time being, but it's starting to fade. So under that argument that you point out, what risk assets are most prone to losing out?
Well, for the time being, the picture does remain quite positive in terms of liquidity. There is plenty, but at the margin, if we do see deterioration in carry trades because authorities are purposefully injecting some volatility in the market, we could see especially spread product suffering a little bit at the margin, since they are the main beneficiary of carry trade. So you're talking about high-yield bonds in the United States, investment-grade bonds, and so forth. But generally speaking, even this injection of volatility in the market is still quite minor compared to the amount of balance sheet space that still exists on the private sector, the amount of liquidity that still exists on the private sector balance sheet, and therefore the ability of those agents to take on risk and continue to bring the price of risk assets higher right now. And it's going to take much more action in the yen, for example, to end this.
Okay, let's shift a little bit to the United States and the US dollar. Its dominance so far, I would say, is still intact. You argue that we could see shifts away from the US dollar. How soon do you think we will be living in a world where the US dollar is not the dominant global currency? And who's set to benefit the most from that? Is it Europe? Is it China? Is it someone else?
Well, the reality is that the US dollar is set to remain the dominant currency for many decades here. However, there is subtlety in this situation, because the extent of the domination of the dollar in global capital market is exceptional and has been exceptional for the last 20 years. So what we are seeing here is more a deterioration at the margin. Namely, we expect currencies like the euro, but also the smaller currencies like the Australian dollar, the Canadian dollar, the Singaporean dollar, the Korean won, to be a beneficiary of a desire of authorities to diversify away from the dollar. But the dollar will still dominate in this context.
Okay, and Mathieu, let's talk a little bit about geopolitics, but also I'll bring in the Fed into the question. If the next market catalyst is not the Fed, but it's geopolitical tensions or trade tensions that are stemming out of whether it's the US, China, or other regions, what is the one trade or a particular trade or hedge that you would want to have in place today to avoid those tensions from disrupting?
Well, it really depends a little bit of the nature of the shock that we are talking about. When it comes to what's taking place in the Middle East, the hedge still remain and will be for a long time oil prices. However, when it comes to the trade tensions and those kinds of development, actually what we are seeing with the policy backdrop in the currency policy backdrop that is evolving in Japan, the pressure of the on the Bank of Japan that is growing right now, at current level of valuation, and again, given the chances now that the Bank of Japan could change its tack, the yen could regain some of its shine as a safe asset that benefits in this context. Finally, I would add that gold is increasingly attractive once again. Structurally, it benefits from the diversification away from the dollar. And we at BCA anticipate a peak in real rates in the United States, which itself will be quite positive for gold prices. So gold as a geopolitical edge is starting to regain some of its shine.
Okay. Mathieu, we're going to have to leave it there, but thank you for your time this morning. Mathieu Savary, Chief Strategist and Head of FICC at BCA Research. Now, coming up, Morocco blames online fake news and human traffickers for tens of thousands of migrants storming a Spanish enclave. We'll have more on the fallout next. This is Bloomberg. Morocco claims that misinformation and human trafficking networks misled tens of thousands of migrants into illegally crossing into the Spanish enclave of Ceuta. While Spain and European allies grapple with the political fallout, Morocco says it's working with Spanish authorities to verify fatalities. Our chief Africa correspondent, Jennifer Zapasaja, joins us now with more from Johannesburg. Jen, good to have you on with us. What more exactly can you tell us about what Morocco has said about what has been triggering this border crisis?
We've actually, Abir, been hearing quite a bit from the Moroccan government. You were just speaking there about some of the comments that we've heard. We've actually heard specifically that they do not believe that this crisis has been triggered by anything circumstantial or spontaneous. And specifically, it's been reported that we heard from the government saying that they believe, quote, malicious exploitation of the digital space, promotion of misleading information, the role of human trafficking gangs, and erroneous interpretations of legal and administrative data for the events. Now, of course, Bloomberg has reported that the government does believe that it is required to have a comprehensive approach to this migration crisis. They do believe that there's shared responsibility, but it seems, in fact, that they're trying to state that it is not just a blame of the government, which we have seen over the past few days. They do say, and they continue to claim, that they're a reliable partner that's committed to international cooperation against irregular migration and human trafficking. But of course, we're hearing a bit of pushback from some of their European partners.
And Jen, what has been the fallout in Europe, Spain, for example?
Yeah, I mean, Abir, we've heard from the Moroccan government that they do believe that most of the migrants have been returned back. But still, as you were just seeing there, there's still quite a bit of concern amongst a number of European countries. You mentioned Spain there, of course, for the way that this has happened and what this means moving forward. In particular, we're hearing from Prime Minister Pedro Sanchez and some other European member states that are a bit concerned about what this means and what this could look like moving forward. We're hearing some EU members have even threatened to implement some border checks and even suggested potentially suspending Spain's participation in the European free travel zone. So it seems like this is not just an issue that Morocco is now dealing with. It is, in fact, triggering more disputes between a number of EU partners. So we'll wait to hear what more will be said from Spain itself. But that is the latest that we're hearing from at least the Moroccan side about what we've been seeing over the past few days.
All right, Bloomberg's Jennifer Zapasaja with the latest on this developing story. Now, coming up, HSBC announces a fresh $1 billion stock buyback after its profit beats estimates. We'll break down the numbers next. This is Bloomberg. HSBC announced a fresh stock buyback as it reported second quarter earnings results that beat estimates. The relaunch of the buyback program comes after HSBC suspended the program after its acquisition of Hang Seng Bank. We're now joined by Tomas Notzel, senior bank analyst at Bloomberg Intelligence in London. Tomas, good to have you on with us this morning. Just before the results did come out, you did put out a note saying that HSBC's robust first quarter momentum is likely to be carried into the second quarter. You were right, but what else were you looking at in those results that came out about an hour ago?
Yeah, well, first of all, I would say it's very strong underlying momentum. NII, banking NII upgraded to above 46 billions, good news. Very good transactional banking and wealth momentum as well. Both beat revenue expectations. Costs are under control. Savings upgraded from 1.5 to 2 billions. Cost of risk or asset quality, nothing there. Everything under control. All in all, ROTE more than 19% and bank resumed buybacks, something that we're expecting. So definitely very strong momentum and possibility that, with looking right now for the bank when they would come back to previous run rate of buybacks to 2 to 3 billions, and second quarter results suggest this could be on track.
All right, Tomas, with those details on HSBC, the earnings that came out about an hour ago. Tomas Notzel, senior bank analyst at Bloomberg Intelligence. And don't forget to tune in to our exclusive interview with George Al-Hadri, Group CEO of HSBC. That will be at about 6 a.m. London time. Now, Palantir shares rose in late trading after the company raised its full-year revenue and income forecasts and reported second-quarter sales that topped Wall Street estimates. The software developer and military contractor boosted its outlook after what CEO Alex Karp called otherworldly commercial demand. Karp also described the quarter's performance as, quote, staggering. Later today, SpaceX is set to report its first ever quarterly results after the close today, following the company's blockbuster IPO this summer that raised roughly $86 billion. The stock has underwhelmed after a powerful rally in its first few days of trade. Analysts are likely to press CEO Elon Musk on the company's progress of its high-spending AI and Starship rocket projects. Now, a quick look at equity benchmarks. U.S. futures still in the green. Actually, NASDAQ, Dow Jones are also in the green, and Euro Stoxx 50 futures 0.3 higher. Oil prices slightly higher this morning after those contradicting statements between the U.S. and Iran. That is it for Horizons Middle East and Africa. Stay around with us for Daybreak Europe. This is Bloomberg.